Hey, this is not your advisor with NYU grad. Just a quick disclaimer. This podcast was created by Alphabet and their NotebookLM AI software. Pretty incredible. The output may or may not be 100% accurate in citing the source material. That's just a quick FYI. The AI technology is new, so please use as entertainment, as a starting point for your research and discussion. At the very least, it should give us the flexibility to imagine how this AI technology will be impacting our lives in multiple facets. Hope you enjoy it.
Welcome to the deep dive, everybody. We're going way back in time to 2007 today.
Ooh, 2007.
We're diving into the insights of Bill Cara.
Yeah.
From his website, billcara.com. This is a super unique website. And a really interesting guy.
Yeah, he's been around for a while.
Bill's been running this site since 2004.
Wow.
Completely ad-free, no charges.
That's pretty remarkable, yeah, especially in today's online environment.
Absolutely.
He was kind of ahead of his time, it seems.
He's all about creating this community around smart investing.
Yeah. And fostering that sense of community is really what it's all about.
Yeah, and we're specifically focusing on his 169 gems from 2007. It's this compilation of his observations and predictions right before the financial world went
things shifted.
kind of haywire.
Absolutely.
Yeah.
Big time.
So it's like a time capsule from a pivotal moment in financial history.
Yeah.
And what we found really interesting is how these gems sort of cluster into these really relevant themes that we're still seeing today.
Absolutely. Very much relevant today.
So one of the most prominent themes is market manipulation.
Oh, yeah.
Bill Cara does not shy away from calling out what he sees as the hidden forces influencing market movements. Right from the start, gem #1.
Oh, wow.
He talks about the relative strength index, RSI, being this key tool. But then he cautions about the forces, the hands that can sort of push and pull prices in ways that aren't always transparent.
Interesting.
So he uses terms like quants and hedge funds in gems #2 and #9.
Okay.
Already highlighting their growing influence back in 2007 and how they were impacting market volatility.
Yeah, very interesting.
And then he introduces this idea of the humongous bank and broker, or HB&B,
HB&B.
in gems #14 and #26.
Right.
It's kind of like his catch-all term for these powerful institutions he believes are manipulating the market
Interesting.
for their own benefit.
I see.
It's a theme that runs throughout these 169 gems.
Wow. So this is like a...
And it's especially interesting
Yeah.
when you consider what happened just a year later with the 2008 financial crisis.
Oh, yeah.
A lot of the practices that Bill warned about,
Like what?
excessive leverage, opaque financial instruments, and a lack of regulatory oversight,
Right.
were all exposed during that time.
Exposed, for sure.
And even today, debates about market transparency and the influence of large financial institutions are still ongoing. So
Still relevant.
he was really tapping into something fundamental about how markets operate.
Yeah, he was.
I mean, he was raising red flags back in 2007.
Yeah.
And his observations feel
Like he would...
incredibly prescient when you look at the trajectory of the markets
Yeah.
since then.
Totally.
Remember, he wasn't just some armchair analyst. He was an auditor with firsthand experience in the financial world.
Yeah, he had seen it.
Yeah.
He had seen it all.
And that leads us to another major theme woven throughout these gems.
Okay.
The perils of debt.
Uh-oh, the big one.
The big one.
Yeah.
Yeah.
Debt, everybody loves it.
Everybody loves it.
Until they don't.
Until they don't. Exactly. In gem #3,
Okay.
he talks about the cyclical nature of debt
Right.
and its impact on markets. He was particularly worried about the growing levels of debt in the system,
Yeah.
especially this rise of liar loans,
No.
which he mentions in gems #42 and #85.
Got it.
He could see the housing bubble
Yeah.
inflating
Yeah.
and knew it couldn't last.
Right. Everybody was living large.
Living large until they weren't.
Until they weren't. His analogy of crap-backed debt securities in gem #120 really paints
Oh, that's a good one.
this vivid picture of the vulnerability of the system
Yeah.
when
right.
those types of flimsy debt structures are prevalent.
Particularly when interest rates rise.
Right.
And his concerns about rising interest rates played out
Yeah.
dramatically in the years following 2008.
Oh, yeah.
I mean, think about the collapse of the housing market, the wave of foreclosures, the global financial crisis that rippled through the world.
Absolutely. Changed everything.
It's chilling how accurately he foresaw the dangers of excessive debt.
It really is.
And it makes you wonder,
Yeah.
have we truly learned our lesson? I mean, global debt levels have continued to rise.
It's crazy, yeah.
Since 2008.
Right.
And a lot of experts are sounding the alarm about the potential for another crisis.
It's a case of history, rhyming, if not repeating itself.
Exactly. But let's shift gears a bit.
Okay.
And talk about a theme that's especially relevant to our listeners.
All right.
The importance of independent thinking.
Oh, that's a good one.
The good one.
Yeah.
Bill Cara is a huge advocate for this.
He really is.
He constantly encourages people to think for themselves.
Yeah.
Do their own research.
Yeah.
And not just blindly follow the crowd or so-called experts.
Right.
In GEM's #4 and #10,
Okay.
he criticizes
He's not afraid to.
traditional financial education.
Yeah. What's he say?
Arguing that
Yeah.
real-world experience and a willingness to learn from your mistakes
Like, you have to get out there.
are far more valuable.
Yeah.
He even goes so far as to say that much of what's taught in business schools
Oh, wow.
is useless
Ouch.
in the real world of trading.
Oh, okay. Interesting.
He really wants people to challenge conventional wisdom
But get out there.
and think critically
Yeah.
about the information they're consuming.
So important.
Yeah. And GEM #5 is a perfect example of this mindset.
Okay.
He emphasizes the importance of
What does it say?
staying disciplined, avoiding herd mentality, and being prepared to go against the grain
Oh,
if your analysis leads you there.
right.
This was 2007. But his advice is even more relevant
Oh, I bet.
in today's world of social media,
I was going to say, yeah, with all the influencers and...
where financial influencers are constantly bombarding people with information and opinions. It's
It's a lot of noise.
It's easy to get swept up in the hype
Yeah, totally.
and lose sight of your own financial goals.
For sure.
Bill's approach is all about cutting through the noise,
Yeah.
focusing on the fundamentals, and
So important.
developing your own
Yeah.
independent judgment.
Right.
And he's not just talking the talk. He's been walking the walk
Right.
for over 2 decades, providing free,
It's pretty amazing.
valuable information on his website and fostering this community of independent thinkers.
It's remarkable. It really is.
It's truly remarkable. So let's dive into some more of these gems.
Okay, yeah.
And see how Bill Cara's insights can help us
Yeah.
navigate today's complex financial landscape.
Yeah, we need all the help we can get.
What else kind of jumps out at you from these early gems?
Well, there's a lot of talk about risk management
Oh, risk management.
and protecting your capital.
Oh, yeah.
It's almost like a recurring mantra throughout these gems.
Yeah, it's all about
Yeah, he really hammers
that
home.
preservation.
Yeah.
Yeah.
Bill Cara repeatedly emphasizes the need to understand and manage risk. In GEM #8, he reflects on his early trading experiences and highlights how both his successes and failures shaped his approach.
Interesting.
He learned to trust price action
Okay.
and to always be intellectually curious.
So he's not advocating for blindly following
No.
any particular strategy.
No, it's about being adaptable and recognizing when market conditions change.
Yeah. Having a plan, but being able to adapt
Right.
as needed.
Exactly. And that ties in nicely with his advice in GEM #13.
Okay.
When it comes to money, I have a simple rule. Trust no one but yourself.
Wow.
He learned from his experience as an auditor that following the money and asking tough questions is crucial.
It's a valuable lesson.
Especially in the financial world, where conflicts of interest can be rampant.
Oh, absolutely.
He provides a powerful example of this in GEM #15,
Right.
where he criticizes institutions for prioritizing their own profits over the interests of their clients.
Interesting.
He was already seeing this trend back in 2007.
Yeah.
And unfortunately...
I mean, it's something that continues to be an issue today. It's still around.
Oh, yeah.
Yeah.
Big time.
He's basically saying that the system isn't always designed to benefit the individual investor.
No, it's not.
So you need to be aware of the incentives at play and
you can't just assume that.
make your own informed decisions.
Yeah. Everyone's looking out for your best interests.
Exactly. He reinforces this point in GEM #20,
Okay.
where he laments the erosion of trust
Interesting.
in professions like law.
Wow. Okay.
He believes that the pursuit of self-interest has corrupted ethical standards in many fields.
Oh, yeah.
And the financial industry is no exception.
For sure.
It's a sobering thought, but it underscores
the
importance of Bill's message.
Be informed.
Be informed, be skeptical, and take control of your own financial destiny. Don't just hand over your money to someone else and blindly trust them to act in your best interest.
It's your money. Take care of it.
Exactly. Now let's shift gears a little bit and look at some of his specific advice on trading.
All right, let's get into it.
So in Gem #29, he reflects on his early experiences with penny stocks. And highlights the importance of objective thinking.
Oh, objective thinking.
So important.
He stresses the importance of focusing on
What does he say?
price action and volume.
Okay.
Rather than getting caught up in stories or rumors.
Yeah, that's a classic mistake.
It's a classic mistake.
That many new investors make, getting emotionally attached to a stock or believing the hype without doing their due diligence.
And in Gem #31, he provides a glimpse into his approach to trading junior miners.
Okay, junior miners.
Emphasizing the need for discipline, agility, and
it's all about
a keen awareness of market cycles.
Yeah, you got to be quick.
It's a sector that can be incredibly volatile, and he's basically saying you need to be quick on your feet and adapt to changing conditions.
Exactly.
He also stresses the importance of recognizing market manipulation in Gem #33, pointing to tactics like...
What does he say? Share buybacks and rumor mongering?
Oh, yeah.
That can artificially inflate stock prices. It's almost like he's pulling back the curtain on some of these tricks of the trade and showing how institutions can manipulate
for sure.
the market.
Absolutely.
For their own gain.
They're playing their own game.
And he doesn't hesitate to call out unethical behavior. As we see in Gem #39. Where he describes a situation where a company was deliberately bankrupted to eliminate the rights of bondholders and shareholders.
That's intense.
It highlights the lengths some will go to enrich themselves at the expense of others.
At the expense,
It's a reminder that while the market offers opportunities for wealth creation, it also has this dark side that we need to be aware of.
There's always a flip side. Absolutely.
And in Gem #40, he reminds us that we are often playing against professionals who have far greater resources and expertise.
They got the inside track.
So he stresses the need for...
What does he say?
A clear plan, discipline, and patience, urging investors to let the market come to you.
Ooh, I like that.
It's about taking this
like a
defensive approach rather than
be patient,
trying to outsmart the institutions.
Let them make the moves and then capitalize on their...
Exactly. And in Gem #41, Bill reveals his own values. Emphasizing the importance of...
What's he say?
Helping others, building friendships, creating value rather than simply seeking personal gain.
Interesting. So he's not just all about...
It's a refreshing contrast to that cutthroat mentality.
Like the typical Wall
Street. That often pervades the financial world. And it aligns perfectly with his commitment to building this community on his website.
It all comes back to that.
Speaking of community, in Gem #58, Bill shares some personal reflections, offering insights into the experiences that shaped his approach to life and investing.
So what's he talk about?
He talks about his upbringing, his fascination with systems.
Oh, interesting.
And logic, and his belief in doing for others.
That's it.
What you hope they will do for you.
Classic one, the golden rule. Yeah, for sure.
It's a glimpse into the personal philosophy that underpins his trading approach.
Very interesting. So it's all about integrity and hard work. And
it highlights the importance of integrity, hard work, and a commitment to...
Continuous
learning. Now let's move on to another theme that emerges strongly from these gems, the role of government. And its influence on the markets.
Ooh, that's a big one.
The big one, yeah. In Gem #66, Bill tackles this issue of market intervention. Arguing that governments often manipulate markets for political reasons.
They have their own agenda.
He criticizes this lack of transparency and the conflicts of interest that permeate the system, arguing that true free markets require a level playing field.
Right. Everyone plays by the same rules.
Yeah. It's a point of view that many people share, especially those who believe in limited government intervention in the economy.
Yeah. They want the government to stay out.
And Bill doesn't just complain.
Right.
He also proposes solutions.
Okay, what's he say?
So in GEM #68, he highlights the importance of gold as a store of value.
Okay.
Arguing that it will always be a safe haven in times of crisis.
Right.
He seems to be suggesting that diversifying into hard assets, like gold, can provide a hedge against the manipulation and instability.
Right, when things go haywire.
That can plague financial markets.
The shiny stuff.
Yeah, exactly. It's a timeless insight, especially
as
we navigate this period of unprecedented
so crazy
monetary expansion and geopolitical uncertainty.
But you know what's going to happen.
Many investors today are looking for ways to protect their wealth from inflation and economic turmoil. And gold is often seen as that.
Right. It's a classic
safe haven asset.
Safe haven, yeah.
Now let's shift our focus to another key theme that emerges from Bill's gems, the importance of
what's he say?
Discipline and emotional control.
Oh, that's a big one.
In trading.
Yeah, that's a big one.
Yeah.
Your emotions can get you into trouble.
Oh, absolutely.
For sure.
In GEM #70, he offers some sage advice for navigating
what's he say?
Market volatility.
Right, because markets go up and down, and when they go down...
He reminds us that crises create opportunity.
Right.
And that successful traders are those who can remain calm and rational when others are panicking.
So it sounds simple, but it's incredibly difficult to do in practice.
Oh, yeah.
When markets are crashing and everyone is selling.
Yeah.
It takes a lot of discipline to stick to your plan and avoid making emotional decisions.
So he stresses the importance
of
sticking to your strategy, managing risk, and avoiding emotional decisions.
And he provides a concrete example of this in GEM #71, where he outlines his own disciplined approach to trading, emphasizing the importance of identifying trends.
And cycles, buying low and selling high.
So simple.
Yeah, classic.
Effective.
But it takes patience, discipline, and a deep understanding of market dynamics.
Right.
Bill reinforces this point in GEM #84, where he urges investors to ignore the noise and distractions that can cloud their judgment.
Right.
It's about developing a long-term mindset and staying true to your investment philosophy.
He also reminds us that success in trading is not about being right all the time.
Oh, right, yeah.
As we see in GEM #92.
Okay, so what does he say?
He points out that even the best traders are only
100%.
66% of the time.
Wow, that's interesting.
The key is to
That's the key.
Manage risk, minimize losses, and let your winners run.
Oh, I like that.
Yeah. So it's a philosophy that emphasizes consistency and discipline, rather than trying to
pick every market top and bottom.
Right. Yeah.
Well, that's a refreshing perspective, especially
so much
in a world where so much emphasis is placed on short-term performance. Right. And it's a reminder that successful investing is a marathon, not a sprint.
Yeah.
Now let's look at another theme that Bill Cara touches on in his gems, the changing global landscape.
Okay.
In GEM #96, he expresses concern about the growing concentration of power in the hands of a few, both in government and the private sector.
Oh, that's interesting.
He seems to be warning about the erosion of individual liberty and the rise of a new form of oligarchy.
Wow. So
it's a prescient observation.
It's like a bigger picture view.
Yeah, he's looking at the big picture here.
Especially given the trends we've seen in recent years with the rise of tech giants, the growing influence of financial institutions, the increasing concentration of wealth.
Yeah.
These are complex issues with far-reaching implications.
Absolutely.
But for now, let's shift our focus back
Okay.
to the practical
Yeah.
realities of trading.
So in GEM #99, Bill provides a sobering reminder
Of what?
of the dangers of excessive
Leverage. Yeah.
He recounts a personal anecdote
Oh, wow.
about a neighbor who lost his home
Oh, no.
due to the
It
collapse
was the housing
of
market.
the real estate market.
Yeah, we saw that a lot back then.
It's a stark illustration of how quickly fortunes can change.
Right. When
Debt levels are unsustainable.
Over-leveraged, it can come crashing down.
And it underscores the importance of managing risk and maintaining that margin of safety.
Right. Yeah. You always got to have a cushion.
Exactly.
In case things go south.
And in GEM #100,
Okay.
Bill reminds us that navigating periods of market turmoil requires a clear head, a steady hand,
and a steady hand,
a disciplined approach.
Great. You don't want to panic.
He stresses the importance of watching for signs of trend reversals, adapting to changing conditions, and avoiding emotional decisions.
Right. So it's about staying focused on the fundamentals, managing risk, and sticking to your plan even when the market is volatile.
He also offers some valuable advice.
Okay, like what?
For managing margin calls. In GEM #142.
Okay.
He argues that meeting margin calls is essential to maintain control of your portfolio, stressing the importance of having a system in place for selling.
Yeah, right.
Panic sets in.
Before you get that call.
He also advises paying down margin debt whenever you feel uncomfortable with risk levels.
Yeah, don't get over your skis.
To avoid getting caught in a margin call situation.
Right, exactly.
It's a practical reminder of the importance
of managing leverage.
And staying within your risk tolerance.
Exactly, yeah.
Bill reiterates this point in GEM #153.
Okay.
Where he discusses the
What's he talking about?
psychology of trading.
Okay.
During market downturns.
So when things go bad.
He points out that many investors struggle to sell losing positions.
Yeah, they hold on.
Often holding on to stocks.
Right.
For emotional reasons.
Emotional reasons.
Yeah.
Like, oh, it's going to come back.
It's going to come back.
Yeah, I'm sure it will.
Yeah, hope springs eternal.
Yeah.
He emphasizes the importance of
What's he say?
Having a plan.
Right.
Sticking to
it.
To your discipline and being willing to take losses when necessary.
Right. Sometimes you got to cut your losses.
It's about separating emotion from logic.
Yeah.
And making rational decisions based on
your assessment of the market.
And Bill provides a fascinating glimpse into his own trading approach.
Oh, interesting.
In GEM #154, he reveals that he relies on a simple mechanical system.
Interesting.
Based on time series analysis, avoiding the noise and distractions that can lead to emotional decisions.
So it's an approach that prioritizes discipline, objectivity, and a deep understanding
of market cycles.
And it's a reminder that successful trading doesn't require
complexity
or insider information.
But rather
it's just
sound strategy and the discipline to execute it.
Right, it's all about execution.
These are all incredibly valuable lessons. But before we wrap up this deep dive, let's explore one final gem that captures Bill's wisdom.
All right.
And GEM #169.
Okay.
He reflects on his experiences on both the sell side and buy side of the market, offering a profound insight into the importance
what'd he say?
Of teamwork and continuous
learning. Teamwork makes the dream work.
He emphasizes the need for collaboration, mutual support, and a shared commitment.
Right. You have a team.
To excellence.
A team that's on the same page.
He also stresses the importance of finding a team that values integrity, hard work.
Those are the core values.
And a willingness to learn from mistakes.
Learn from your mistakes.
It's a fitting conclusion to this collection of gems, highlighting the enduring value of community, mentorship, and a shared pursuit.
Right. It's all about sharing.
Of knowledge.
Yeah.
And it brings us back to why Bill Cara started
a website
in the first place. He wanted to create a community where people could learn, share, and support one another.
Right.
Right.
It's been over 20 years since he launched BillCara.com, and his commitment to building this community of informed investors remains unwavering.
He's been doing this for 20 years.
It's
remarkable.
Remarkable.
Yeah.
So as we transition into the final part of this deep dive, let's reflect on the profound impact of Bill's work. His insights are just as relevant today as they were back in 2007.
Absolutely.
Offering valuable guidance for anyone seeking to navigate the financial markets with wisdom and prudence.
It's amazing how much ground we've covered.
Yeah.
And yet it feels like we've only scratched the surface of Bill Cara's 169 gems.
Yeah.
But I think what's really resonating with me is how his insights go beyond just trading strategies.
Oh, yeah.
It's really...
That's a philosophy.
A philosophy for approaching life and navigating this complex world.
You're right. There's this underlying message about taking responsibility for your own decisions.
Right.
Being skeptical of conventional wisdom and constantly learning and adapting.
Right.
Those are principles that apply far beyond the realm of finance.
And it all circles back to that idea of community.
Right, exactly.
Yeah. Bill Cara could have easily packaged his insights into a paid course or subscription service.
Right.
But he chose to share them freely with the world.
Yeah.
That says a lot about his values.
It really does.
And his belief in the power of collective wisdom.
Think about it. BillCara.com has been a hub for independent thinkers and investors for over 2 decades.
Wow.
All built on the foundation of free access and open dialogue.
Yeah.
It's a testament to the enduring power of community and the generosity of someone who genuinely wants to help others.
So as we wrap up this deep dive, let's try to distill some key takeaways from Bill Cara's 169 gems that our listeners can apply to their own lives and financial journeys.
So number 1, I think, is awareness of market manipulation is crucial. Bill Cara constantly reminds us that markets aren't always fair or rational. There are powerful forces at play that can influence prices and create opportunities for those in the know.
So we need to be vigilant, do our research, and question assumptions.
Absolutely.
Don't just blindly follow the crowd or take financial advice at face value.
Exactly.
The second takeaway is the importance of managing risk.
Oh, yeah.
Bill Cara repeatedly emphasizes the need to understand your risk tolerance and invest accordingly.
Exactly.
Don't get caught up in
you don't want it.
Chasing quick profits or taking on more leverage.
Don't get over your skis.
Than you can handle.
Exactly.
He's a big believer
You want to
in having that
safety.
Margin of safety, protecting your capital and being prepared for unexpected downturns.
Unexpected.
And that leads us to the third takeaway.
Which is?
Independent thinking.
Oh, the big one.
The big one.
Yeah.
Bill Cara is...
a champion.
A champion.
Yeah, he's all about it.
For critical thinking.
Right.
And encourages people to develop their own judgment.
Yeah, do your own.
Don't rely solely on...
Don't just take it...
experts.
Or...
at face value. Financial gurus.
Yeah.
Do your own research. Question assumptions. And think for yourself. It's about taking ownership of your financial decision.
And not being swayed by...
by hype or emotional impulses. And finally, I think the most powerful takeaway from Bill Cara's work is the importance of...
community. He's built a platform where people can share knowledge, learn from each other, and support one another on their financial journeys. That's something we can all strive for in our own lives.
So as we conclude this deep dive into Bill Cara's 169 gems, let's leave our listeners with a challenge.
A challenge.
How can you apply these principles of awareness,
risk management,
management,
independent thinking,
and
community to your own financial decisions and your life.
Right.
In general.
Great question.
We encourage you to explore the full collection
definitely.
of 169 gems on BillCara.com.
BillCara.com.
And join the ongoing conversation.
Yeah, become a part of the community.
Thanks for joining us.
Yeah, thanks for listening.
On this deep dive. Until next time. Stay informed.
Stay engaged.
And keep learning.
Keep learning.